Good afternoon. My name is Dana Syracuse. I'm partnered with Perkins Coie, where we help lead the Fintech and blockchain practice, and we're here today to discuss decentralized finance. The topic is what is DeFi and why the future of finance will be decentralized. We're here with Jake Chervinsky, who is General Counsel of Compound, Brian Avello, who is General Counsel at Maker, Mike Lempres, who is executive in residence at Andreessen Horowitz and also a board member of several entities, including Revolut, Bitstamp US, and Silvergate Bank. Thanks for being here.
Happy to be here.
Yeah, thank you.
Thanks, Dana.
So, I guess just some context setting. What is DeFi? And very loosely, it's a term that gets thrown around quite a bit. And very loosely, it refers to financial services offerings that are built on public blockchains, and they're based on decentralized applications that allow services to be offered without a central intermediary. There are popular applications out there. We hear a lot about types of lending services. We hear about types of exchange services. And we were just with Brian Brooks, acting comptroller of the currency, and the last question touched upon DeFi. It was essentially like, can these systems exist side by side? And the feedback there was, you could envision a future where you have banks helping, providing excess computing power, acting as node validators. So that's obviously, zooming out way into the future. But fascinating to see how this, could eventually come full circle. Just turning it over to the panel. To your mind, what are the characteristics of these decentralized platforms, and why do we care? What's the overall scope of the opportunity here? Horowitz will take that first. Mike, you want to take that first?
Sure.
Yeah.
Sure. I think we're learning what the overall scope of the opportunity is, but I think potentially it's enormous. And I think what makes it exciting is nobody quite knows. To my mind, there's no upper limit to this. The basic concept of DeFi has got you working in an environment where you don't have a trusted central point. And what it enables all kinds of peer-to-peer, B2B, other things to take place simultaneously, real time. It's very exciting. It should be, the technology permits a level of transparency you just don't see in the rest of it. And I want to hear what other people say, but in terms of the marketplace, I would say I don't think we know the market yet. I think we got a lot of neat ideas that are out there. You're hearing from two of them today that are instrumental, parts of the DeFi ecosystem, but it's building out. I think it'll look very different in 3 years, and I think it'll also have impacts on traditional finance. So if we pull out 3 or 4 years, both what we're now calling DeFi and traditional finance will look different because of what DeFi is doing now.
Yeah, I agree with that completely. I think it is very early days, so we're still figuring out what this technology can do. But I think just looking big picture at what DeFi is and what it's trying to accomplish, I think it's best to compare it to the traditional financial system, which is at its core an intermediated custodial system, right? For every financial transaction we want to conduct, we have to have a financial institution in between that transaction. So, Dana, if I want to send you money right now, since we're not next to each other and I can't hand you a $20 bill, we need some institution to process that payment. And that's also true for more complex types of financial activity, like loans or transfers of other types of assets that aren't just money. And the goal of DeFi is to allow those types of transactions without needing to rely on that centralized, trusted third party in between our transactions. I think the big benefit of this is, first of all, the system becomes non-custodial, meaning you don't have to rely on that third party to maintain custody of those assets, which they may lose or misplace. There may be a bug in their database that goes wrong. We also don't have to trust them to custody our data, which is another very big and very separate issue, where we see these hacks of large databases and loss of massive amounts of personal identifying information. And then also putting these transactions on decentralized protocols allows them to be a lot more resilient and a lot more transparent, right? There isn't just one computer that could go down and the whole system fails. And also there isn't a black box that regulators and others can't see into, because all of these transactions are transparent and auditable. They're public by default. So that's the big benefit. And we're still seeing sort of how far we can go with that type of upgrade on the financial infrastructure underlying our system.
Yeah, but my only points, well, two things just to add. Just a quick preface before I make any comments. I'm here in my position as general counsel for the Maker Foundation. However, nothing I say today should be construed as legal advice or guidance. And as I'm appearing today in my personal capacity, nothing I say should be taken as an official position of the Maker Foundation, its directors or executives. That said, I agree wholly with what the points that Jake touched on, and just a little bit of an addition on the transparency point. I think with a lot of the more well-known protocols that you're seeing, or that you have seen develop over the last 2 years, over the last year, all of these ways of observing activity on each separate protocol are actually coming up through different community members that are contributing to governance, or taking a role in assisting the governance of those separate protocols. So sitting where you are today, you can see at a granular level or at a macro level how all of these different protocols are performing. And I would imagine from a regulator's perspective, it takes much of the onus for the onus for looking into and having to have a relationship with an intermediary who is taking custody of assets is a much simpler way of being able to actually look at and monitor the activity that's occurring at those different protocols. So there are regulatory benefits that come from having an open and public and transparent system, the way a lot of these DeFi protocols function.
Yeah, no, I definitely think those are all benefits. I think one of the challenges, if with where a regulator is going to come in, is very often regulators, they want to throw it to choke. Something goes sideways. Who do I call? Who do I talk to? And so the interesting thing to me is going to be like, something goes sideways. Does that kind of wind up pushing regulation or pushing regulatory enforcement one way or the other? I'll tell you that the way as outside counsel, the way I sometimes come to these issues is probably in a very similar way that Mike comes to them as an advisor. Would be companies come and they say, well, we want to engage on X platform. What are the regulatory issues that I could find myself a part of if I start transacting on X decentralized exchange? So, are there OFAC issues? Are there money transmission issues? Sometimes these entities are MSPs. So, can they meet all of their own obligations by transacting on X platform? Curious, Mike, to hear kind of your view about some of these, legal and regulatory risks, and also how that, if some of that winds up kind of, modifying or lending a gloss to, the advice that you give to various parties.
Yeah, it's a big part of what we talk about. And a couple of things. One is, I think it should be expected that the startups, the innovators, are going to be ahead of the regulators, and it's going to be that way for a while. And I think that's normal, and it's part of the risk in this whole ecosystem, is that we're pushing boundaries, and the regulators are really just now beginning to get their hands around it, to understand what's out there and to understand how to deal with it. The basic premise. Now, I should mention, Dana, too. I've spent a lot of time in the government and working, with and as a regulator, and it's the perspective you bring in is the existing system. The status quo is what you've got, and you're going to apply that wherever you can, and that's going to be applied here as well. There's going to be a lot of issues that come up, but a point that I stress with everybody I work with is, there's no magic way to hide from regulation. That is not what's happening. You can't just structure around it in some way. I mean, if there's a regulatory goal, whether it's anti-money laundering or whatever it is, you've got to factor that into your planning. You've got to figure out how you can responsibly talk to a regulator and explain why that regulator's goals are being met, and hopefully that somebody somewhere in the ecosystem is addressing it. It doesn't have to be every party that does it. In the case of DeFi, for example, it's quite often that you got a protocol that's out there that is not in anybody's control, and it's very hard for a regulator to regulate a protocol that's just floating around out there. However, if there's activity on that protocol and there's centralized point anywhere along the lines, the regulators will go to those centralized points, could go to those centralized points, and expect compliance with the existing laws. I would also say that what's come up in the last couple of weeks for me has been a concern that we are going to get regulation by enforcement in this space, and that's a real challenge. Ideally, I think what would happen is some time would pass and regulators would have a rulemaking process. We'd all agree on what the rules are. They'd publish them and we'd get moving. Unfortunately, that doesn't appear to be where we're going. And you've got enforcement actions beginning to come in, and they probably will not be consistent. And will take a while before we really all know what the rules are in this space.
Yeah, I mean, my background is as a regulator as well, and to me, for regulators, there's a propensity to try to call it something. In the previous discussion, we were talking about the OCC and analogizing custody of digital assets to custody of digital goods and trying to call it something. So I think regulators and law enforcement can do that in a positive way, where they're trying to bring something in, but then they can also wind up doing it in a negative way, where they're going to look at X type of service and make it fall into a bucket. And that's how they get their arms around it. Brian and Jake, how have you guys dealt with some of these thornier legal issues?
Yeah, I'll take a first shot at that. I mean, the answer in general is very carefully, because, of course, we are talking about financial activity in general, which is a highly regulated area. So we have to make sure that we are considering regulatory compliance from the start and from the design phase. But the way that we think about it really goes to a point that Mike made, which is understanding the difference between a protocol, which is not in anyone's control, and a platform or application, which someone is actually running and is offering to customers. And you can think of this sort of using the example of the internet, right? There are basically every internet application runs on a protocol called TCP/IP, which no one really controls. And on top of that protocol are other protocols like email protocols, such as SMTP. And then on top of that, you have the actual applications that allow people to send emails. So Gmail, for example, has its own platform on top of SMTP. And to the extent that there is an appropriate place for regulation, it really is on that application layer, not necessarily on the protocol layer. So as general counsel to a company that is developing open source software, not so much offering platforms to specific customers. We are a venture-backed company. We don't have customers of our company. And I should say, like Brian mentioned, I'm here in my personal capacity, not to represent Compound Labs, but just to give you my personal opinion on how to approach this. We think about creating protocols that truly are not within our control, or the control of any other trusted or centralized third party, where regulation would be appropriate. And then we trust regulators to understand how the technology works, and we spend a lot of time trying to educate them so that they can understand where there are risks and where there may be market participants that are appropriate subjects of regulation. So that's sort of a general way of thinking about how we approach open source software in the DeFi space.
Yeah, I would just second Jake's points. I mean, from Maker's perspective, it's a very similar way of thinking of protocols versus applications thereon. And I think that TCP/IP, HTTP, and multiple layers of what gave rise to the internet is a very apt and appropriate way of looking at kind of the development of decentralized protocols, Ethereum, Maker, Compound, and all the things that get built on top. One thing I would add is I agree with Jake at the application layer. If there are businesses that are using these underlying protocols in a certain way that delves into regulated activity, I think you can have I've seen offhand referred to as walled gardens, right? Where within these walled gardens can occur this regulated activity, and the entity that's operating that application, be it doing lending, formal remittance services, or some way of taking custody, that entity operating that application is certainly open to acquiring the correct licensure for that specific activity. So I think you can have, like Jake was alluding to, you can have these protocols, and on top, all of these different business layer applications that may be engaging in regulated activity, and as a result, they should get their requisite licensure. I think it's an appropriate way of looking at it.
And then I guess for Jake and Brian as well, are there any kind of unique operational risks that are associated with these platforms that operational risks? And if you're running a a lending program, pretty, we can all kind of come up with a list of those. But are there any unique operational risks that are associated with running, a lending platform in the DeFi space?
So I guess it depends on what you're doing, right? And it really is, this is where you really have to get into the nuance and understand what is a company in the DeFi space actually doing. So most DeFi developers right now are not running platforms in the traditional sense. And this again sort of goes to the question of, do you label something new with language that really reflects the old way of operating? A decentralized protocol by definition should not be operated by anyone. Right. So if you have a protocol that is being quote unquote run by someone, it's probably not decentralized in the first place. And it's probably not right to call it a DeFi protocol. The point of a DeFi protocol is to take all of the rules and procedures that define a particular type of financial transaction, whether it's sending an asset or lending or borrowing an asset or exchanging one asset for another, and then reducing all of those rules and procedures into self-executing code that runs on the blockchain on its own without any interference or tampering by any third party. In fact, these protocols, if they're designed correctly, cannot be run by anyone other than the nodes that are validating the network in the first place. So I think what's most important in thinking about DeFi development is making sure that you have true decentralization, as opposed to what's often called the decentralization feeder, right? Where you have protocols that are sort of acting like they're decentralized, but in truth, there are certain administrative rights or other aspects of control that the original developer still has over that protocol, so that it looks a lot more like a traditional financial institution that just happens to be using a blockchain instead of a server to run their own software. So what's most important is making sure that you're not doing this decentralization feeder and saying, don't worry, it's on a blockchain, so it can't be regulated or something like that, which is absolutely not true. And making sure from the start you are truly designing decentralized protocols that are open source and that don't have these centralized points of failure.
The only thing I'd add to that, and Jake's points are excellent, is I think Vance Spencer, who's a VC, had a very interesting interview that he gave on the Bankless podcast the other day, and he was discussing the type of personality that goes into a founder of a decentralized founder, the original kind of idea for decentralized protocols, and it certainly does take a special type of founder who is willing, even at the earliest stages of designing and launching or contributing to the launch of a protocol, the concept that they will ultimately give control over to the community that's going to be contributing and guiding the protocol's development going forward. I think, Rune and Robert, the head of Maker, and Robert, the head of Compound, have that kind of similar personality in that way. And it's a very kind of special type of leadership that needs to be provided. And to the extent you don't have that and you're thinking about or contributing to what could be a decentralized protocol or project in the future, that I think strikes me as an operational problem, because you have to have really a commitment to this ethos of having this platform out of your control as early as possible to really find kind of a fit within the decentralized or DeFi space.
So, I mean, it just sounds like, broadly speaking, in terms of the types of decentralizations that are there, you've got kind of architectural, so you've got a distributed number of nodes that lend to security in the operations, and you've got governance. So, similar to the concept of a shareholder who would be voting in a corporation, you've got governance token holders that are influencing elements of the protocol. So MakerDAO is the MKR token, Compound is a compound governance token. I guess, are there, what are your thoughts in terms of that type of system versus more centralized platforms? We've touched upon that, but do you see them in kind of existing side by side or being absorbed into more centralized offerings? Does this go mainstream?
So my take is, I do think it goes mainstream, but I think it is just a very different kind of system from what the world is used to. So I think, there is a temptation to compare a governance token to equity shares in a company. I think they're actually very different. I think the only thing that is similar between the two is that both have voting rights, but the rest of the mechanics around them is completely different. when you own equity in a company, you're voting basically on what the board of directors and management of the company will do. Management is sort of deciding how the vision of the company will be executed. They're commanding employees to carry out that vision. That's totally unlike how these decentralized protocols work. In a decentralized protocol, and I'm generalizing a little bit, but this is sort of the experiment that's being run right now with governance by an unaffiliated and dispersed group of token holders. What you have is a protocol that executes whatever the vision is of the protocol on its own. It is self-executing autonomous code. And the only thing that the governors are doing is voting on changes to the code of the protocol. They're not telling management what to do. They're not deciding whether management is doing a good job or a bad job or changing the directors of the corporation or anything like that. They're literally just proposing and voting on changes to the software that is running on the blockchain. The only reason that this is necessary is because there are some reasons to think these protocols should be upgradable and that you should have a formal system for making those upgrades. The Bitcoin protocol does not have a formal system. So when the Bitcoin protocol gets upgraded, it's a very informal, sort of hard to understand process of miners on the network deciding to use changes to the consensus algorithm or to the software they use to mine blocks on the network. And the idea for DeFi is there should be a little bit more of a clear process for how you make those changes, if there are any changes to be made. But very unlike a corporation, no changes are necessary, no management is necessary. These protocols function on their own and will continue to function on their own exactly as they're designed, basically forever, as long as the underlying blockchain continues to function. So in that sense, it's very different. But I do think it goes mainstream. I think the way it goes mainstream is that there are stakeholders in these protocols, right? The companies that are building businesses on top of them. Like, for example, a cryptocurrency exchange builds a business on top of the Bitcoin protocol, right? The protocol is very different from the exchange company, but the company is interested in the future of the Bitcoin protocol. Those stakeholders will be the ones who make decisions about the changes to the protocol. And then those companies might have their own IPOs and they'll have their own equity shares that trade and they'll succeed in that way. I think that's sort of where this all goes in the next few years.
Brian, Mike, thoughts?
I agree with that, and I think it's going to be broader than we expect now, because I think traditional financial institutions are going to see there's certain advantages in DeFi in terms of speed and transparency, and I think that you are likely to see traditional financial institutions adopting different DeFi, different aspects of DeFi, and either building on protocols themselves or using them in some form or fashion. And that'll happen pretty quickly and largely will be invisible, I think, to the customers of that traditional financial institution. I think if you roll this out a few years, it will go mainstream, but it will not go mainstream because you've got a bunch of builders on these protocols who decide it's going to go mainstream. It's going to go mainstream because there's some advantages inherent in the DeFi process itself, and that's going to cause traditional financial institutions and others to build towards similarities, and let's build together.
Yeah, the only thing I would add there is I think it's completely foreseeable that some financial institutions could adopt some aspects of these different protocols as almost back office or kind of back end software for future product offerings they want to make. And I mean, as far as the continuing development of the space, I mean, if you think about all these different projects, even over the last year, I mean, when did Compound launch? Last June 2019. When did Maker first launch? Single Collateral died December 2017. It's been 2.5 years at this point, and the amount of growth in the overall space has been astronomical, right? So 2.5 years from now, really, it's who knows where things could necessarily end up. I mean, a lot of thought leaders are kind of opining on it, but I think it's very difficult, even kind of seeing the trends we've seen over the last 6 months, to say where things could be in the next 6 months. It's from a development standpoint.
Yeah, and I guess how much of it is going to be hiding the architecture, hiding kind of making it the user interface easy, making it easy for someone to participate. Is that something that kind of the folks that are building these systems now are even care about, or is it kind of an assumption that will come later on down the road? Because I think back to the first Bitcoin that I bought, and it was a giant hassle. Now it's far easier. And I look at kind of the folks that I interact that are utilizing your types of platforms, and they're very, very sophisticated people who are going to go through all the steps necessary to participate. Curious to hear, Jake, I see you nodding.
Yeah, no, I completely agree. And I think, not to speak for everyone in DeFi, but I think we view this as financial infrastructure, right? It isn't necessarily the product offering itself. It's something that institutions can use that they will benefit from. And this isn't really a new concept, right? This is the story of open source software for the last however many number of decades, right? If you talk to engineers who are building software platforms at every traditional financial institution in the world, whether that's the most traditional bank up through the most innovative fintech, most of what they're building on is open source software, right? They're using code that is free to use, that's been publicly audited, that a lot of eyes have looked at to make sure that it's secure. That's one of the main benefits of open source software, right? The more eyes you have on something, the more likely it is to be secure. And then they're integrating that on the back end. And it's not something that the customers understand at all, right? When you download an app on your phone to buy, put options or call options or something like that, right? You're not really thinking about what's going on under the hood. And this is the same thing for DeFi. It's allowing financial institutions to use open source software that saves them a whole lot of time having to build their own bespoke solutions for every single thing that they do. And it's also freeing them up from having to play this custodial role that they've been playing for so long, right? A very capital intensive role, and one that carries a lot of risk where they have to maintain custody of their customers' assets and data. So I do think that a lot of this will end up just being infrastructure that the customer is not aware of as they're just getting better services from the financial institutions that are leveraging this technology.
Dan, if I could, when you talk about sort of the customer experience, I think it's been pretty typical in the evolution of tech that what comes first is not that easy to use. And it's the next generation where the user experience really begins to step up. I think here, if you think about it in terms of who's likely to provide a really smooth, easy user experience that any consumer anywhere can use, that's that generation of app builders. I think Jake and Brian both talked about we'll get a protocol and then the people building on top of that protocol. There's going to be an app builder or I don't know what name it'll be used, but at least some kind of app. That'll be very smooth, very easy to use, and probably that'll be a winner in this space.
Yeah, I mean, my only point to add is, I think you're already seeing that, companies that are not affiliated in any way with the companies or foundations or groups that launch these protocols, they're already developing very user-friendly UIs. I can think of a handful of examples off the top of my head. One, Idle.finance is one where you can actually lock up different sorts of assets and obtain APY from a number of different protocols all at the same time. And the user interface is very, very simple, very easy to follow. I think you're just going to see that sort of process replicate itself over the probably 6, 12, 18 months, 24 months over the next few years.
And just one more point to throw in there, Dana. You mentioned that you bought Bitcoin, right? I think that that's great that you were willing to go through that process. There frankly aren't a lot of people who necessarily are that interested in Bitcoin. And one of the great things about DeFi, this speaks to the work that Brian's crew has been doing, is DeFi is really financial infrastructure for the US dollar. Right? There's a lot of commitment to creating new types of financial transactions using US dollar stable coins that are either backed by actual dollars held in bank accounts or algorithmic stable coins like DAI that are pegged to the value of the US dollar. And so opening up the benefits of crypto systems to US dollar transactions, I think, expands interest in this space a huge amount. It's not just Bitcoin and other esoteric assets anymore.
The only thing I would add is DAI is a crypto collateral backed asset where you have other algorithmic stablecoins like I think Basis and a handful of others that are on the market. But all those models are. But the point is that even though there's all these different kind of models for U.S. backed or USD connected or soft peg stablecoins, it's that's been the leader in the market thus far over the last year or so, or 2 years since DAI was launched.
Do we lose Brian?
We can carry on in his delay. Yeah.
Here you go.
I think we you froze there for a second, but I think we
Oh,
think
sorry about that. Bad
That's
internet
right.
connection here.
All right. I guess moving away from kind of the question squarely focused on DeFi. One of the things that occupied a lot of my attention late last week and over the weekend, and even still, is the CFTC and DOJ actions involving BitMEX. So for those that are watching that aren't aware, on October 1st of this year, the CFTC and DOJ announced parallel civil and criminal actions involving the offshore digital asset derivatives platform that's called BitMEX. I believe that these actions they show that businesses that are offering illegal digital asset products and services to U.S. customers aren't going to be shielded from regulatory registration requirements and compliance obligations, like know your customer diligence requirements, just because they have offshore corporate structures. Curious to hear the kind of the views of this group and any particular kind of applications or lessons learned from that to your industry. Jake, if you want to go, or Mike, you want to?
I was going to jump in and just say I'm not sure they're specific to this industry, right? I think these are just sort of general rules people should know. Again, by the way, this is all we've heard is one side of this story, so I'm working off of what the CFTC and the Southern District of New York have said. But if you look at that, what they're saying is you can't go to another jurisdiction, in this case the Seychelles, maintain offices in the United States and service customers in the United States and think that you're avoiding the long arm of U.S. jurisdiction. I think that's true no matter what industry you're in or no matter what's happening. So that's kind of a fundamental point. I also think that in this case, what they are accused of doing is, with regard to the criminal action anyway, is that they were allegedly actively avoiding their U.S. Bank Secrecy Act, Know Your Customer obligations, and fairly large sums coming across in that way. I think again that's not specific to our industry. I think if that happens in any financial related industry, that you're gonna see an action. So I don't think there's a lot that really is specific to this industry, except perhaps a reminder to the industry that the regular rules apply to this industry like any other. And I think that's a big lesson that people need to learn or need to remember, because there's so many ways in which decentralized finance and cryptocurrencies and the whole ecosystem are pushing boundaries in many ways, operational, legal, regulatory, a lot of ways. You need to remember the old rules still apply. We're not in some new system where nothing, we can make up our own rules as we go. That's just not the case. The only other thing I would remind people is that it took about 2+ years for this matter to come to a head. And it's just something to remember, that the government moves very slowly in situations like this, and it'll take them years to initiate an investigation and to go through. And so it's likely there's probably something else cooking somewhere else that we just don't know about yet. But what I always fall back to is if you're following the rules and you're doing something that you would be happy to explain to your parents what you're doing, you're not ripping anybody off, you're not helping people launder funds, you're not doing any of that, you're probably in pretty good stead, no matter how the federal regulatory apparatus comes around. So that'd be my thoughts on it.
Yeah, I completely agree with Mike, and I echo basically exactly what he said. I think that all the BitMEX action stands for is the very well settled principle of regulation, which is same business, same risks, same rules. And the fact that there is a digital asset involved, Bitcoin or some other digital asset, doesn't change that it is the same business, the same risks, and therefore the same rules. If a company set up offshore and was offering oil futures denominated in US dollars to US citizens, it would be subject to the Commodity Exchange Act. And, of course, the allegations are unproven, so we should remember that. We only have the one side of the story. And BitMEX has said that they intend to fight these charges. But at least based on the allegations, it doesn't seem all that all that surprising that there was an action. And also, as Mike said, we knew that there had been at least an investigation started by the CFTC based on public reports, I think in early 2019. So I think many of us who observe this industry closely and have sort of seen in real time some of the evidence that ended up being, or the allegations that ended up coming forward in the CFTC's complaint and in the indictment, this really wasn't a huge surprise. I think that there was some expectation that something like this would come forward. And we'll see, of course, how it turns out. But I think it is a good reminder for everyone, not just the crypto industry, that regulators are watching. And just because you may not have been called out directly for some regulatory violation within 5 minutes of committing it doesn't mean that there won't be consequences down the road. And I think the lesson for those of us who are building in this industry is, like I said before, design compliance into whatever you are doing from the start. Don't build a system and then try to justify it later. Make sure that what you are doing is compliant so that you can look your parents in the eye or regulators in the eye and justify what you're doing because you actually paid attention to it in the first place.
And I just think from the builder's perspective, to the extent this, for projects that are considering launching or in the pipeline for actually bringing something to market, to the extent this sends a little bit of a, I don't want to say a shot across the bow, but to the extent it demonstrates the seriousness of kind of what other projects might be facing as a result of this, closing your eyes to what could be plainly in front of you sort of behavior, I think it's all the better for future projects coming down the pipe.
I think all of your points touch upon something very important, which is, again, as Mike said, all we have in front of us are the allegations. But people see these stories and they say, well, this is a story about digital assets. This is a story about the blockchain industry. When it's not, it's a story about compliance. It's the same thing when you hear about ransomware attacks or cyber incursions that involve Bitcoin as ransom. That's not a Bitcoin story. That is a cybersecurity story. And I do think that often gets conflated and lost. So I think that's a very important point. Have a couple of moments left. One last thing I wanted to touch upon is FATF and the travel rule. We know this, that the travel rule requires VASPs to provide and collect and transfer, provide customer information as part of its transactions. I know that this is something that a lot of the digital asset custodians, more traditional ones, centralized ones that I work with, are wrestling with. Are there any kind of particular issues or call outs with regard to DeFi, or is it kind of, regulation is regulation no matter how you slice it? Jake, if you want to take that one.
Sure. Yeah. I mean, I think, as we've been saying, regulation is regulation. And what's key is to look at the regulation and figure out to whom it applies. And if it applies to you, make sure that you're following it. And, when you look at, the Bank Secrecy Act here in the US or FATF guidelines in general, the regulations apply to intermediaries in the financial system, those with custody who are processing transactions on behalf of others. And, there's something really unique about the crypto industry, which is that people are able to take control and custody of their own assets. And FinCEN has been very clear that when that happens, the Bank Secrecy Act doesn't apply, right? If you, Dana, buy your own Bitcoin and transfer it to your own hardware wallets or to your own account, it doesn't make you a regulated financial institution. So I think what needs to happen in the industry is for the regulated institutions to make sure that they are complying with the travel rule. And at least from my vantage point, I know there's been some difficulty that they've had in making sure that they're doing that, but also to understand that one of the most important aspects of this technology is allowing people to take custody of their own assets and then figuring out, as I think FinCEN has done a fantastic job of in the last couple of years, especially in their guidance in May of 2019, understanding where the limits of the Bank Secrecy Act are and where the risks really just don't require such onerous regulation.
Yeah, I think the risk here, Dana, to me at least, is you're dealing with FATF, which is, many governments all around the world. We need to make sure that we as an industry are communicating with those governments so that they know they have a better understanding of what they're regulating and different ways to regulate it. I actually, when you pull back and look at it, this regulation, the travel rule and other regulations can work in this space. It can be done. And the biggest risk is not that someone's going to firmly decide not to do it as far as the government is to do something. It's going to be that the government doesn't quite know how to handle it. They pass some rules or inconsistent rules that make it very, very difficult just from an operational or commercial standpoint. I think we'll work through that. I think we just need to make sure that the governments are aware of all the implications of what they're doing.
Great. Well, I see that we're at time. Want to thank everyone for joining. Really, really appreciate it. It was a great conversation. And yeah, thank you so much.
Thank you.
Thanks, Dana.
Enjoyed it.